Welcome back to FT Markets. China is very much back in the spotlight again. It's not just the democracy demonstrations in Hong Kong that's worrying investors. We're seeing quite a significant slowdown in China and worries about the property sector. With me to talk about these developments is George Magnus, an independent economic advisor. George, thanks for coming to the FT. First of all, on those demonstrations, those protests we're seeing in Hong Kong, are investors right to be worried?
Well, I mean, the answer is obviously it depends what happens on the streets of Hong Kong. I mean, I think
and the reaction of
yes, I
authorities.
think most people, probably don't believe correctly that actually the regime and the government of China is at risk. So it's only a question of how the demonstrations, the democracy protests are kind of managed away. If it's done in a sort of a relatively peaceful way, then I think it's of no real consequence, not to global markets. If it happens in a more violent way and maybe the riot police and the PLA are basically brought out of the barracks, that's a different ballgame. I think people would be worried then about global reactions then.
And the impact on the markets. Because, of course, these protests are happening at a time when, as I said, we have this slowing in the Chinese economy. If you look at our first chart, the slowing is quite significant this year. But there's been lots of issues about the imbalances within the Chinese economy. So maybe this is actually a healthy rebalancing.
It is, in a way. What this chart shows is the difference between the official lending rate, which is around 6%, the red line, and the growth of the monetary value, the nominal value of GDP. So there was a time, as you can see, apart from the financial crisis, when there was a huge gap.
Yeah, creating distortion.
Which is otherwise known as financial repression, which has been the cornerstone, really, of China's investment and credit-fueled economic model. As this gap is narrowing, because that's a good thing for the rebalancing of the economy.
It looks more natural. But then in the past, we've always had the Chinese authorities reacting to slowdowns by providing more stimulus. I mean, they could, of course, now cut that lending rate. Do you think they will or should?
Well, I don't think they want to. I mean, the whole ethos of stimulus this year has been low profile, by stealth, and recently there have been some initiatives, for example, to provide liquidity to the big banks, to instruct the 4 major banks to cut their mortgage rates. I suspect that the downturn in the property market is of such consequence that interest rates will be cut later this year.
Yeah, if we turn to our second chart, we can see the developments in the residential property markets. And as you said, the slowdown quite severe there going on. Is this a process that can be managed smoothly, or is it going to be a lot of volatility for markets to worry about?
Well, I think it will be anything but smooth. In fact, this year it's actually proven to be quite disturbing for the conduct of the economy. And this downturn in residential property investment, which is the red line here, actually has huge knock-on implications for earnings of companies, for investment, for inflation, and we can see continuously, despite stealth stimulus measures, a continuous weakening of the economy, which I think will continue for the foreseeable future.
And presumably with demonstrations in Hong Kong, it's likely to possibly exacerbate the worries and the volatility in markets?
I think only if these demonstrations in Hong Kong spilled over into the mainland, which I think is a very slim possibility at this point, would that have additional complications for the economy. It's got enough problems without having to deal with social unrest too.
But it begs the question of where the growth is going to come from in China.
Indeed, and the growth will come eventually from a shift towards household services and investment in the household sector, basically. But that's a long and difficult process to achieve.
George, thank you very much. So some very interesting times in China at the moment, worries about those protests, but also that transition to a different kind of Chinese economy.